Small cap stocks disappointed investors in 2022 even as the frontline indices delivered modest gains and outperformed their global peers. While the Sensex and the Nifty 50 indices are closing off the year with a gain of around 5% each, the Nifty Small Cap 250 index has shed 4.4% in 2022. The BSE Small Cap Index too slipped 2.5%. This underperformance was mostly due to the rise in price of raw materials and interest rate hikes, which impacted the company's financial performance as per analysts.
Even mid-caps have underperformed. It is because of the exuberance which it showed, and there were a lot of new listed companies also, and all these stocks, they corrected, due to rising interest rates. Rising interest rates normally affect them, and when you are a small company, you cannot pass the raw material cost increase. You lose the advantage, But I think now that is behind us, and the valuations have become very attractive in small cap and mid cap. Second half of 2023, I think small cap and mid cap will start to outperform.
Meanwhile, in the broader market, around 51% or 257 stocks from the BSE 500 pack have delivered negative returns in 2022. Notably, stock prices of new age companies like Paytm, Zomato, Nykaa and Policybazaar more than half during the year. Brightcom Group, Tanla Platforms and Metropolis Healthcare were among the top losers during the year, while those of PSU companies firmly held ground. The BSE PSU index surged 22% this year after zooming 41% in 2021.
Markets would be closing more or less flat for the calendar year 2022. Overall, a disappointing year. Most of the favorites of 2020 and 2021 underperformed, whereas the pockets which did extremely well were the PSU stocks, especially in defense as well as the BFSI space, which in fact had underperformed in the last 2 years. Markets got affected due to Russia-Ukraine war, consecutive rate hikes, mixed earnings, fear of global recession, and finally we had the COVID threat recently.
Among other sectors, automobiles, private banks, capital goods, power, oil and gas, FMCG and metal sectors outperformed the market this year with returns of over 8%. IT, pharmaceutical and realty sectors, on the other hand, were among the worst hit, which slumped 10 to 24%. Domestic institutional investors or DIIs supported the rally and bought a net of 2.72 trillion rupees worth of shares during the calendar year 2022. FIIs on the other hand sold nearly 1.22 trillion rupees worth of Indian equities in 2022 as the stronger dollar weighed on sentiment towards emerging markets. Among Sensex stocks, ITC, M&M, Axis Bank, NTPC and SBI were the biggest winners that rallied 30 to 50%. Analysts remain bullish on the road ahead for equities in 2023, with those at Julius Baer expecting the Sensex to hit 70,000 levels. Mark Matthews, head of research for Asia at Julius Baer, says, "We look at India as a long-term investment than just the next 12 months. We would want to be invested in it for several years to reap the full rewards of an economic upcycle." On a standalone basis, Indian markets have largely been trading in the range of 19 to 20 times forward earnings. The valuations are rich but justified as the corporate sector has delivered consistent growth. That said, equity markets could remain sideways today as the year's last trading session may see lower investor participation.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.